Folks, this is Bob Desmond over at The Contrarian Trader, and welcome to Members Stock Chart Request. This is where we review the symbols our members submit for me to review on video. Before I begin with tonight's Members Stock Charts review, let's discuss the economic data that was released today, and it was just horrible, absolutely horrible. So let's begin Bob's rant off with retail sales. Retail sales had a little bit of good news. Let's start off with the good news. The prior period was flat, no growth. They revised it up one tick to 0.1%. That's where the good news ends, because this month they expected a negative read of negative 0.1. Actual was negative 0.3. Then when you take a look at retail sales, X auto, the prior revision that we had, which was an all-in number, when you take out auto, you saw a prior read of negative 0.3 to negative 0.4. Think about that. So any and all growth came in the auto sector, where there's a huge bubble in lending. Today's number that expected a read of 0.3, a move higher of 0.3. Actual was a negative 0.1. The producer price index came out flat. At the core, up a tick. And a quick rundown on the rest, Empire Manufacturing Survey, that came out with a negative number, which was expected, but it was twice as bad as what was expected. Industrial production fell. Capacity utilization fell. So tomorrow it's CPI and the Michigan Sentiment Survey. Stay tuned to the news. All right, let's get to the charts. First chart up is for Brett, GoPro. All right, so GoPro peaked out in mid-August. Big correction. Today, it broke out on rising volume. Ultimate oscillator hooking up, breaking out. Stokes are hooking up, but still, I don't think that this stock is out of the woods yet. I want to see the Stokes above the 50 level, above the neutral level. So if you're going to go into the shares, okay, partial position, allow it to pull back, retest the breakout point, add more there. If it breaks out and breaks out above today's high, well, then you could add more. Weekly chart. All right, weekly basis, the RSI is still in an uptrend, very, very healthy. We flagged out here as we rallied up and into the declining 50-period moving average, which still is in a decline. It is not flattened out yet. So it was resistance back here. It's going to be resistance again. So if we rally up and through the 50-period moving average at $14.80, which is where it lies right now, you could add more to your position. Fannie Mae, weekly chart. All right, so this is a story about rates. I don't believe they're going to raise interest rates in September, but the market continues to fret over December. The reason why I went over the economic data today is because with this type of economic data that's coming out now, the Federal Reserve would normally be talking about accommodation. Now they're talking about raising rates? I don't think so. Not anytime soon. Not if these numbers continue. So if the fear of rising rates remains with the market, Fannie Mae will not do well. But what did Fannie Mae do on a daily basis after the news was announced today about the economy? It rallied. Looking back over past couple of months, you could see that here was the Brexit worry. Rates were going down. Fear of the Federal Reserve was non-existent, and we rallied strong. So this is an interest rate play. Honestly, not my kind of play. I'm happy because I have positions that would benefit from lower rates. I'm happy to see the rise in volume, big volume. So it could head higher, no doubt about it. But for me, it's really way too speculative. I would avoid it. And for your information, we have resistance at, let's call it, technically we closed at resistance, but we have resistance right above at, let's call it 3.50. Next chart up, TZA. Okay, this is a ETF where we did very, very well with in late 2015 and into early 2016. We pretty much made our year along with our trades on NUGT, and obviously we have broken down. Now, good week last week, and okay follow through this week, but resistance right at the peak of the week. So I can't go buying the TZA until we get a breakout above resistance. We need to recapture this resistance level. Then I would consider getting long. And I would consider getting long only after the next week's Fed meeting. Because if they do not raise rates, the markets should have a knee-jerk reaction and move higher. Will it last if there's a threat of a December rate hike? I think it all comes down to Yellen's statement. Amazon. Daily chart, bullish key reversal today off of its 50-day moving average. Bullish stuff. So I think that Amazon could move higher here. Just beware of the fact you have both lines on Stokes trading down below 50, putting in lower lows. That's not a good sign. So I wouldn't get overly aggressive with Amazon because we're so near to the high. And you may be saying with $30 off of it, well, it's a $700 plus stock. So $30 is not much. So if you use my adage, which is the test is always at the top, you'll buy here with a stop loss right below the day's lows, then add more if we successfully break out above the highs seen on September the 7th. Otherwise, the chart looks good. I would just stop out right below this 50-day moving average, though. This market is so fragile right now, I can't put it into words. Gold, GLD. I was surprised today with the price action, I have to admit. While the mining names did well, they sold off the highs of the day. I was very, very surprised to see after the economic data came out today that the dollar rallied initially and gold tanked. And while the dollar eventually pulled back and continues to pull back, gold never regained its footing. So maybe traders had OCD. They needed to see it test its support level. Who knows? But the price action was not awe-inspiring. So if you're going to buy it, I would use a stop loss right below the day's lows and get out. Volume to the downside was weak as well. 2-hour chart. All right, so we bounced off the lows of the day, then rolled over. We need to see a higher low. I can't get excited. As a matter of fact, let's update this chart. Okay, updated chart. I like to take my crayon out, draw my lines. All right, so I can't get excited about the GLD until it rallies through this upper band of resistance on a 2-hour chart and holds it. It has to close there. So that's the GLD. It needs to show us that it has the strength to rally, in short. Okay, members, what we're going to do is we're going to segue into market wrap, discuss the markets, and also discuss our positions. We want to have a strategy as we proceed into the Federal Reserve meeting next week. So let's get to it. Let's talk first about the S&P 500 daily chart. While we rallied today, this is not an exciting day for me. Volume was good. We have resistance right above here. And it acted as resistance today. We closed down below this resistance level. If we rally through and close